Welcome to Piponomics YouTube channel, where we will trade live together and teach you the fundamentals of trading. Today, we're going to go over the double bottom pattern. The double bottom pattern is a long position. So that means that we've hit support, which we can mark on our charts as an area of support where the market has came. It has not gone through yet. And we can say that, hey, this is now an area of support where the market has a problem breaking through, and we want to look for long positions. Another key indicator that it wants to go the opposite direction is if it doesn't come down and break this level of support. Now, we can get a third hit, and that makes it a triple bottom, but we're still looking for the hit to happen at the same area as the other two. We are also saying, hey, if you're in the sell-off, maybe we should consider taking our profits if it does it a third time. Especially a second time, it has happened and it's ran up on us, but a third time is key, that hey, this is definitely an area of support that the market is having problems running through. Now, if that does happen, what I do want to see is that this W, which is in a shorting position, is selling off. It comes to a point, right? Our point is here. It goes up to another point, which it doesn't matter if what that point is, given that we are looking for double bottoms, which is at this point. This point of the support level is where we're saying, hey, we're interested in what this thing does from here on up, because we're looking to reverse this pattern. And if it's a good reversal, we could take this pattern all the way up to the top of our 200 EMA. I want to make sure we understand that these EMAs do mean something, because with the white EMA, or in some cases, some people might have theirs as gray, because this is the standard market maker method that I'm using, and I'm showing you how to use the EMAs on. It's one of the oldest strategies out there, and you can get a lot of information about it, given that it is one of the oldest methods out there. So this EMA represents 200. This means that in the last 200 candlesticks, this has been the average price. Now, you're going to see these EMAs move around on you, because they're going to get tighter. They're going to come down, go up, based on where the candlesticks is playing at any given time. But this is the standard area in which you want to take profit, given that that's the end of the BTS and you're following a BTS. The BTS means that it is a reversal point. So you can check what a BTS is based on where the candlesticks are at right now. They're currently not inside of our area of interest, right? But what did complete, and how do I know we are playing in a BTS? Because if we go down to just one level lower, you can see that the candlesticks came into the area of interest between the 200 and the 50 here on the 5-minute, which changes, okay? Because as you get good at going from chart to chart, you're going to see there's going to be changes. So here's your 200 EMA. It did complete it. Here's your 50 on the 5-minute. It did complete it, but what we don't want to see is the EMAs come out on the bottom of that BTS, because that signals that it's not quite ready to go upward, but maybe a fake out for it to go downward. But we still have our area of interest here. We still have we're still looking for a reversal point. We want these candlesticks to come back into our BTS area, which is the area between the 50 and the 200. And then we want to see it, bounce up and go the opposite direction. Now, how do we plan for something like that? I'm going to show you how do we plan for something like that, by getting rid of what we already completed and doing our box strategy. The box strategy is what most of you should be familiar with by now. And it's basically when you block in the Asian range. The Asian range is from 6 p.m. Eastern Standard Time to 1 a.m. Anything that happens during that time is is mostly consolidation. It's not a lot of movement. You get most of your movement, especially playing with US pairs, USD pairs, during the day after 9:30 to about 4. 4 p.m. Anytime after that is dead space, and you're playing consolidation. So some people have a good method to that. Some people are would prefer to play during the day when the market is open, when investors are actually trading, because it's much more lucrative. And what I'm looking for is, one, to clone that Asian range, because this is about the average amount of pips that any pair will move before it looks for a reversal or even a pullback. So here we are at the bottom, and we have remember we have our double bottom. So I'm going to still shade that in, let us know that this is a point of support. And I'm going to measure with my Fibonacci tool that box from top to bottom. I'm going to put in my reversal point, which is my negative 1.15. I use it also as a stop loss. So if I'm selling this, this will be my stop loss. If I'm looking to buy into this, I'm going to look for a candle closure over this point to say that this is actually something that I'm interested in. And it's a great entry upon close of candle, not a wick, of candle, over red line for a buy. This is only another opportunity for me to buy. Okay. I'm going to do the same thing with the box at the top. I'm going to measure it with my Fibonacci tool. I'm going to take it from the bottom to the top. I'm going to say, hey, here's my stop loss, which is my take profit for the reversal point. And here is my 80%, which tells me that it's going to continue to go that direction. And it's also liquidity sitting there at the top of that box. So if I was to play this double bottom, I'm looking for a long position. I'm going to stack my long position from here, giving me just a little bit of room to just in case it turns around, to manage my risk, which is below that support level. And I'm going to take it up here to the top of my 80%, which is also meeting close to my 200 EMA. Okay, because as over time, the 200 EMA is going to pull down, and then this is going to be a great area to take profit, because you're trying to reduce your risk by taking profit at these different levels of resistance. Resistance because your EMAs are on top. So these are different levels that the market can reverse at, and you just want to be sure that you take, if some, not all, but some of your profit, if you're moving it, if you're playing it upward, also looking for it to not reverse and go the opposite direction as a fake out. So we're looking for candle closures over our red lines. Right now we're getting some pullback right here, and if this returns to this level, it becomes a triple bottom. But what we're looking for is an indication that it does not want to go any further down. But we're looking for candle closure for an entry into this market, which serves as also the neckline of that double bottom, that it wants to go upward instead of downward. So here you are here as a waiting for that confirmation. And then here are your TPs, which is here, TP1, which is red to red, and then TP2, which becomes your top of that BTS, and you will be watching for the same thing that you're watching here with this red line. I'm just going to clone it to take it from here to here. All right. So hopefully you learned something from this module, and I will see you in the next.